Right, Lockheed Martin results just hitting the tape. Morgan Brennan is here. She's got the details on what to expect or what we see in this report. Hey, Morgan.
Hey, Becky. Good morning. Well, it was a noisy quarter for Lockheed Martin. Revenue of $18.6 billion, while up 5%, slightly below expectations. EPS at $2.22. That includes a $1.7 billion loss related to classified programs, a large portion of that unplanned. That pulled down earnings per share dramatically, so it's unclear whether that is comparable to estimates of $6.65 per share. Lockheed CFO Jay Malave calling this de-risking actions that resets our future outlook more favorably. Now, for 2025, GAAP EPS at $27 to $27.30 per share. That was a little light. Revenue of $73.75 billion to $74.75 billion. That's slightly better at the midpoint. But Malave saying missiles and fire control, which makes rocket systems, missile defense, that's the star of the growth story, though sales in all segments are expected to increase this year. Now, I asked what the top weapons maker expects from the Trump administration, including from DOGE, which has pressured defense stocks since the election. Lockheed's COO, Frank St. John, telling me, quote, we've been advocating for multiple years now for digital technology to be integrated into the military space, for a separate rapid acquisition process for digital technology, that everything that we're hearing are things that have been part of our approach for the last couple of years. Now, I also asked about DeepSeek and what Chinese advancement in AI could mean from a geopolitical and national security standpoint, given the fact that AI adoption is happening on the battlefield. St. John telling me, quote, the CCP has been very clear over the last several years in their intent to integrate their commercial tech in their military space. So we've been partnering for multiple years with companies like NVIDIA, Microsoft, Meta to responsibly integrate AI into not only our operations within the business, but also into our delivered capabilities. So in light of that, you can see that shares of Lockheed Martin are down fractionally right now. And, of course, they're not the only ones in the aerospace and defense industry to report earnings today as well. RTX also reported today. They had a beat on the top and bottom lines. It looks like revenue guidance for full year 2025 was a tad light. You can see, okay, Lockheed Martin's now down about 2.5%. Last I checked, RTX was down fractionally as well. But in their defense business specifically, they also talked about the demand for missiles, missile defense like the Patriot system, and actually also counter-drone technologies, which obviously we've been talking about quite a bit, not just abroad, but even here in places like New Jersey. And then Boeing, don't forget, everybody focuses on their commercial business, but their defense and space business continues to be challenged as well.
I think the big question overall with all these companies has to be what military spending is going to look like in the new administration with the changes that we've seen. You've got companies like Palantir that have done so well in the stock market with them thinking, OK, we're going to be more technology focused in some of these things. And those questions still remain. What happens with Lockheed's plans that have been in there, with Boeing, some of the struggles that they've had just in terms of making a profit with the military aspects.
This is the big debate within defense right now. And it's part of the reason that investors have been selling some of the shares of what are considered, for lack of a better term, the more legacy defense companies, because software is still such a small piece of the broader defense budget here in this country, but it's a piece that's growing. You have been seeing for a number of years now moves to adopt more technology more quickly. There's so much more that needs to be done. But the debate is really, what do you need for the military of the future? How much of this is these new technologies and fielding commercial technologies in a quicker, more innovative way? How much of it is the big sort of, for lack of a better term, exquisite programs that we've been maintaining for a long time and that cost a lot of money? Right. And so that mix is the debate.